Now, I know you're very public about the portfolio. Do you have a number of how much you're up so far in 2023 overall in the portfolio?
In terms of the public account, probably up about 700,000, I would say 700, maybe 750,000 in the public account this year.
And
The debt
percentage-wise, that's
account,
what, like 30, 40%?
no, it's a lot bigger than that. We entered this year at around $1 million, so you can run the
Oh,
math.
wow.
As of
That's
last month's
70%.
closing, yeah, yeah, it's been an exceptionally great year, but also last year was an exceptionally bad year. So it's kind
Right.
of like, kind of the get back of, a lot of pain that obviously endured last year. So, but yeah, I mean, the biggest positions in the public count are Meta. Meta's number one, Tesla's number two, Amazon's number three, number four is Elf, which I'm up like 1,600% on. Number five is I think Palantir. And look at those stocks this year. So, I mean, it's been an extraordinary year. Not every year is going to be like this, I can tell you that, but it's been a fun one. So,
Is all that money on paper or you actually took profits or it's still?
I've taken profits over time in Tesla. I've taken profits in Elf, which was dumb, a very dumb decision. And that's why, for those of you guys that are newer investors, if you own an exceptionally great company where the fundamentals just keep getting better and better, don't be so quick to take a profit. I held like nearly 10,000 Elf shares at one time. I only hold 1,000 today. Those
Wow.
10,000 Elf shares would be worth about $1.4 million or so, 1.3, $1.4 million instead of like I hold 100 something thousand dollars worth of Elf shares. So
Wow.
yeah, yeah. So anyways, don't be in a rush to take profits. I used to own Nvidia in the public count. I made a little bit of money on Nvidia and I took my profit. That stock's 10x since I sold. So
Yeah.
there's a lot of examples I can give you of like taking quick money and then regretting it years later. Like, why did I do that? That was not so smart. So anyways, it is what it is.
Austin asks, do you have a goal for as far as a minimum of a core amount of Palantir shares you want to have?
Not really. I don't usually set many goals around that. I just usually kind of think about like, am I going to get too heavy into a position? And right now, I definitely don't feel like I'm too heavy into Palantir. So I could add a Palantir probably for the remainder of this year, if not into 2024 at some point in time.
Okay.
Palantir is, by the way, way less risky than when I first started buying Palantir. Because, when I first started buying Palantir, really adding a lot of shares was probably last year. And obviously, the company's margins were in a very different situation in terms of operating margins. And so I don't know what happened to you, Amit, but
I am here. The camera just died. I'm still here. There you go.
oh, okay, that's funny. What is with that camera? Like, is
The
it battery?
Sony a6400 and it overheats after like 50 minutes but then it's weird. Some days it'll go for like 4 hours. Like on earnings, it didn't stop for like 3 hours. And I was just like, I don't know how this, whatever.
Hey, if you get a new camera, it's a business expense. And by the
That is
way,
true.
what do you think I'm recording on right here? My camera.
It's just a basic Mac webcam, right?
No. This one's an iPhone.
Okay, can I ask you about that? Why haven't you upgraded your equipment? Why don't you have a good mic? Why do you have the echo in your room? None of that obviously hurts your channel because you're doing really well on YouTube. But why do you not give a fuck about,
I, I,
your
I,
equipment?
I know. I just don't. Anything that complicates the process is like not worth it for me. So if I could get more views because the camera's better, the mic's better, I don't care.
Yeah.
And so that's one of the liberties of kind of being in this position. I just put in all my effort to the stocks, the research, the information I'm giving out. And as easy as the process can be for recording is what I want to make it be. As long as it's acceptable. Like, I'm not recording with a potato. Like, you can still see me decent. Like, I'm sure it could be better, but do you really want to see me better? Like, I don't know. Maybe even 15 years ago, but I
Well,
don't
the
know what
person who
I'm
wants your
going
babies probably does. So
to say. They just
um
want me for my money.
they just want you for your money. Yeah, they want you for the elf gains. I have a question for you because a lot of people had gains on Palantir when it was at $20, either from $7, $8, $9. Some people bought it at 15. They're up at they were up a lot at 20, and they didn't sell. And I'm sure today they're feeling like shit because they didn't sell. What is your word of advice to those people that saw the gains and now saw them wiped away in a matter of a couple of hours?
Yeah, focus long term is my word of the day. Because you can always think about these things in terms of like, well, I should sell it here, buy it back here, sell it. It's such a waste of time. You're going to end up producing yourself worse returns by trying to time in and out of stocks. If you own truly a great stock and you really believe in Palantir for this next 5, 10 years, whatever, to try to trade in and out it's a losing game, because just as easy as the stock went down, the stock could have blasted higher. Like, let's say these earnings came in great, the stock could be sitting at 25, 27. Then you're sitting on the sideline thinking, damn, do I buy now at 25, or maybe it's going to go down? And then it doesn't go down. Next thing you know, it's $28 and $30. And you're like, oh, should I get in now? No. And then it goes to 32. And then you're like, okay, I got to get in this thing. So you buy it at 32, stock starts going down again. Next thing you know, it's at 25. You're like, damn it, this is freaking going down. Let me sell it. And it's such a stressful mess. At the end of the day, buy the dip. If you feel like the stock's had a really extended run, you can do a couple options. You can sell if you really want to sell, but make sure that's a decision you believe in for the long term. The second option is you could buy a few put options to hedge your position. Let's say you have $10,000 worth of the stock, and you're really concerned about it going down. You could buy a few $100s worth of out of the money put options that expire in a month from now or a few weeks from now on an earnings period. You could do something like that, right? Or you can just hold, and if it goes down a bunch, buy the dip. If you still love the company just as much and it's 25% cheaper or 20% cheaper, then you can take advantage of that. So
what is your plan? What is your plan on selling? Do you want this till 2030, or you're ready to get out at $50-$60 on Palantir?
Yeah, it really comes down to the fundamentals. I will sell the stock when I feel like the fundamentals are about tapped out, in terms of the big upside's not there anymore and it makes sense. So, I mean, in regards to Palantir, it should hopefully, if this plays out right, it should be years from now before I even consider selling this stock. That's my hope in regards to this. Like, the best case scenarios is I'm not even considering selling for years from now. So, and I wouldn't be adding a stock like Palantir, especially last year, unless I was very, very bullish on the trajectory for this company for many years to go in the future. Because to take that sort of risk, you really got to believe it's really there. And it's not buying Palantir, especially last year, was not like buying Coca-Cola or Pepsi or something like that. You're taking so much more risk. So you have to really believe that reward potential is there for the next 5 years or so to take advantage of that. So, but yeah, back to the whole thing, man. People stress themselves out too much, trying to worry about this timing in and timing out and all this crap, man. It's not worth it. It's not worth it. Don't even think like that, man. The variance, anyways, it's frustrating. I wish I could just get that out of people's heads, but they stress too damn much.
Yeah, no, that's the one thing I think you've really normalized on YouTube Finance is actually being long term, because there's a ton of channels about trading in and out here and there, but I think you are the, quite honestly, only person that's just buy the damn thing, have a thesis, and go to bed and find the next stock to buy, but don't stress too much about it.
Yeah, one last point before we leave on that is diversification. Because I think that's another reason people get stressed is they have too much portfolio all in one stock. And I'm not taking shots at you, Amit, so don't think that, because I know you got a lot in Palantir. But, I can tell you, I've been that guy before that's been 60, 80% in a stock when I was in my 20s. And just it is so freaking stressful because the movements are violent. But especially nowadays, I own probably 20, 25 different stocks. If one goes down, there's probably others that are doing tremendous. I own dividend stocks, I own value stocks, I own growth stocks. Some are going to be doing really, really well at a time. Some are going to be doing really, really bad. Last year, my dividend stocks were doing great. My growth stocks were getting cremated. And so I was able to buy a lot of those growth stocks at ridiculous discounts and take advantage of that. This year, actually, growth stocks have been doing tremendous. And I see a lot of value stocks trading very cheap, a lot of dividend stocks trading very cheap. And so that's where a lot of my money's going this year. And so, you want to be a well-rounded fighter is the way I always put it. Floyd Mayweather was such a great fighter. It wasn't just because he had a punch, it's because he had great defense. And so as an investor, learn the different disciplines of being a value investor, a growth investor, dividend investor. And as the years tick on, you'll just become more well-rounded. You'll get through the bear markets a lot better, and you'll thrive in the bull markets. So that's the name of the game.
I know you didn't buy Palantir until you really felt convinced, and I know the community, some of my content kind of helped you build the conviction. And I know you started buying at $9 or $8 or whatever it was. Did you expect the run up we had this year? Did you see that coming? Because one of the biggest bulls, did not expect that coming. Were you really shocked by that, or did you think, Palantir should have run up the way it did?
Not really. I mean, that stock was so oversold, in my opinion. I
Mm,
mean, it was like priced for death. I mean, when this stock fell to $6, I think you even fell a little below $6 first. And went
584,
there. Yeah,
584.
five, four. I mean, it was priced on the ground. Like we were practically in the gulag. And it's like for a company with 2 billion in cash, no debt, and a very sticky business model, like we're being priced like a gulag stock. You gotta be kidding me. Um, so it didn't surprise me. And I've been through a lot of these stocks, including Tesla back in the day that just went on some epic runs. And so it never really surprises me too much. Not that I was expecting Palantir to be a certain share price this year. It's just like you just come to expect like some wild stuff. Some stocks are going to oversell that you're like, how is this stock trading at this price? Like Meta last year. If you would ask me, is Meta ever going to go under $100? I'd say, hell no. It was under $100 last year. I mean, that's just stupid. Like, are you kidding me? Even I look at PayPal right now, and I'm like, $60 for PayPal? Like, what are we talking about here? And so sometimes these stocks just make ridiculous moves, and then they make some pretty big moves on the upside. And sometimes they get, a little extended on the upside too. That's the market for you, and that's what creates great arbitrage in the market because especially on the downside, you get these stupid moves, and you get to just add shares at very, very cheap prices that you never thought you'd get that price. Even Palantir to get it at $5 or $6 was, a few years ago, that was inconceivable. Like you couldn't imagine that. And it happened.
It's going to make people a lot of rich at those prices.
Yeah. Whew, yeah. Crazy.
Couple of quick comments. We got about 6 minutes left with Jeremy. CPBISCOE. I don't know how to say that username. I'm sorry, but he says, I was so frustrated today in Jeremy's video. Stocks are getting nuked today. Helped me a ton. Perfect timing. Really helped. Needed that video. Thank you, Jeremy. So, yeah, Jeremy, thanks for a great video helping us deal with some of the decline. Joshua, $3 super chat says, bring back the whiteboards. Alex says, bring back the whiteboards. We need the whiteboards. Why aren't the whiteboards back, Mr. Jeremy? We need them.
The good old whiteboard days. Oh, yeah. I remember those, man. Nostalgia.
Alan says, any thoughts on Rivian? Do you have any thoughts at all about that company?
I like Rivian. I don't own the stock. I don't have any plans to own the stock. But, and I said this, for probably the past 6 to 9 months, Rivian is only, if you forced me to buy another EV related company, there's only one I would buy, and that's Rivian. And I've said that for the last 6 months or so. That's the only one. When I look at their product lineup, specifically between the truck and the SUV, it's very impressive. Obviously, their relationship with Amazon's good. They got a very nice cash balance in that company. And so I do believe they're one that will actually make it around long term. And that's hard to say in the EV space because almost all those companies are going under. But I think they're one that will make it long term. And I think they, I always like to think like, would I buy the product? And I think if I didn't have a Model X, I would buy that Rivian SUV for my family. I like that. It looks like a really good quality product. So yeah, I like it. I don't own it. Don't plan to own it, but I like it.
A lot of people in the chat are asking about Rocket Lab. Do you care at all about a space stock?
I don't know. I don't have any opinions or perspectives on that one. So,
okay, cool. Last question I'll ask you, and I think it's gonna be an interesting question. You might have a perspective, you might not. You got Monster right because you worked at Quick Mart, right? Quick Trip.
Yeah.
There's a company called Celsius that's blowing up. The energy drinks are everywhere. Earnings yesterday were insane. Now I know the market cap's 12 billion, which is a little pricey. I think it's like a 19 times price of sales, which I see on software companies, not energy drink companies. But everyone I talk to is like, this is taking over. And I'm trying to understand from your perspective as someone who got Monster right, because you saw people buying Monster at 3 a.m. If that's happening with Celsius, are you at all interested in pulling a hat trick and being 2 for 2 on energy drinks and stocks?
No. And the reason being is Celsius trades so rich. The nice thing for me with Monster back in the day is I was able to get that at forward P. And by the way, Monster was actually kind of a gateway drug for me for growth stocks, which is very interesting because that one I was paying an expensive forward P for. And I think the forward P was like 23 or 25. But prior to that time, I was like, if the forward P is over 20, don't even talk to me. Don't even talk to me about that stock. And so that one, had a relatively low forward P. Obviously, Celsius is a whole different game. So I can't buy that one. And I do got to say, the energy drink space is really hard once you get past that kind of initial really successful phase that Celsius has had, which is kind of growing to like a $10 billion company.
Yeah.
You've got Red Bull to compete with, and then you got Monster, and Monster's vicious. I don't know if you guys have, Monster's so tough to compete with. So Monster had a major competitor called Bang Energy. which
Yeah.
Bang 4 or 5 years ago, Bang was everywhere. Like Bang was the energy drink, right?
Yep.
Monster comes out with a product called Reign to compete with it, starts competing very well. Then Monster sues Bang because they see that Bang was basically lying about including some sort of creatine in their product or whatever. They won the lawsuit for 200 something million. Bang goes bankrupt. Monster just bought Bang in all the assets in regards to Bang. So now Monster owns Bang. A fascinating, crazy story, man. Crazy story. Jack Owuck or whatever the guy that was behind it. I don't even know where he went or what happened there. But anyways, yeah, as somebody that's been in that space, it is really competitive, and especially because if the next stage for Celsius is really starting to try to take market share from Monster and Red Bull. And so yeah, now you're getting into big board territory. So we'll see. I wouldn't be surprised if Celsius ends up getting bought out over time. I don't know if it's by somebody like a Pepsi. Pepsi's always wanted to be successful in energy drinks, but they've failed time and time again. Coke has a big ownership stake in Monster, so they might not want to do it. But anyways, that's kind of my perspective. It's a hard one because of the valuation. If the valuation was lower, then it's a slam dunk. But because the valuation is trading where it is, you risk the potential there of maybe stagnation for quite a while.
That's actually so interesting because I discovered Bang from TikTok because I know they were sponsoring like every single TikToker on the planet. I didn't know they went bankrupt. Wow. Yeah, it's a tough space to compete.
Yeah.